right, welcome back, guys. Good morning. Yeah, this is good morning, Nigerian local time, and I hope you're all doing great. So, I've come today with our normal daily market review, and this is the daily market review for Wednesday, 29th, 28th, yeah, Wednesday, 29th of May 2024. Yeah, Wednesday 29th of May 2024. So, well, I hope it was a nice day for you. But yeah, the market really delivered very, very clear, like very well. And it was a good trading day. And also a good trading day for a good trading week. So, not wasting our time, I would dip into the whole situation, the whole thing. And before I go on, if this is your first time stumbling on this YouTube channel, please do subscribe to my channel. Give me a comment and all that. And yeah, whether I post this on other social media and you find it, so please follow me up for more content like this. The Euro US dollar daily contract for Wednesday 29th May 2024 deliver as a down close candle, sweeping the Monday Tuesday low plus the previous week Friday and Thursday candle low, which shows that today today price delivery is a large range day that deliver in the direction of the weekly bias. Alright, initially, if you follow up, I did mention that the my weekly target for this week is bearish. So the Monday has traded higher and Tuesday created the high of the week, and now we have seen a proper decline in price in today trading, which has shows like a great significance in price delivery. Now I am very pleased to see Euro rally lower impulsively, confirming the bearish profile for the week and confirming the bearish profile for the weekly anticipation for the weekly anticipated price delivery. Sorry, with the current price delivery, EU has shown. So sorry for the music in between. So I paused the video to go and take some water. So I'm welcome back. Welcome back. So I'm very pleased to see Euro deliver rally lower impulsively, confirming the bearish profile for the weekly anticipated price delivery. With the current price delivery, EU has shown and also confirmed a higher time frame shift in market structure. So I am concluding for a continuous bearish price delivery. So with the current price delivery for Wednesday, I am concluding or anticipating for continuous bearish price delivery for EU. Conversely, there is a strong shift in the DXY price action towards the buy side liquidity, which disqualified the initial projection for sell side liquidity or previous month low price delivery. Although, yeah, what I mean by that is the fact that I've been calling that previous month low on DXY, and with the current price delivery, which has also disqualified that price is not in condition to go towards that area. We refer you guys back to that price. So casting forward, I am anticipating for EU to deliver below the weekly fair value gap or BC low. That is this fair value gap low. This fair value gap is the weekly fair value gap. So the low, we have the low, the midpoint is the red line, and the upper one is the upper line where the stop. So we have the low the mid and the high. So I am sorry. So casting forward, I am anticipating for EU to deliver below the weekly fair value gap low and trade into the daily bullish order block, which will make the buyers for tomorrow perish and also create a fair value gap or CB on the daily time frame. Now, we logically, if you look at price without being told, you know that tomorrow might is not likely to give us an efficient price delivery with Tuesday candle low. So we are surely going to have a bearish order block here, sorry, a fair value gap. But now already we have seen a large range day, but since we have this PDRA, which these two PDRA, which is a higher time frame PDRA, that will make tomorrow not to be a large range day, but it's going to be a short range day. But I'm still anticipating it for that candle to be bearish, either a short bearish day, not a long one, or we could be bullish. But if you are going to be bullish, that means the market might already be trading below this weekly fair value gap low and towards this area, because if we trade towards this area during the New York session, then the New York session will reverse it back and trade into this volume imbalance or liquidity void left untouched in price. Uh, let's go to DXY. So this is DXY, which is the dollar index daily contract. And what you are seeing here is the 4 hour something. Don't know why it's showing on this time frame. So on the 4 hourly contract, we can see, sorry, on the daily contract for euro, we can see that price has significantly rallied and override this high completely and close above it completely, which is a clean wash shift in market structure. So for that reason, I'm anticipating for a short retracement in price that will deliver higher, so that a bullish candle for tomorrow, which if you look back, we also have a down close candle here. So there is so many things in price, which is a bearish daily bearish order block. So which, because of that bearish order block, it might not provide the room for price to move in its own specified direction. So let me just change it to red and work with that. So that's the daily bearish order block. So because of that, we might not see price rally that much. Alright, but we'll tap on it, retrace back into this range. Then from Friday, we might take the Thursday low and go higher, or let's just wait for tomorrow to end before we talk about Friday. But eventually next week, if we are going to be bullish next week, then the whole next week low is going to be on this particular PDRA that will be formed, or that will be left undone in this week. So that is it for the daily time frame for the XY. So going to the 4 hour, we have this area fair value gap on the 4 hourly time frame, and we can see that price has swept a what relative equal low, which is also the previous week low. We sweep it and we rally, and almost above we have bridged this high, and we have also traded into this area. Now that daily bullish order block that remain on tap, we can see the main order block on the 4 hour is this one, because if you look inside the 4 hour, we can see that this market has traded lower, reused the fair value gap, before going. You reuse the other block before going. And now we can, if we look back front forward, we can see that that other block has been used that deliver price lower. So it might not be that effective, but it could also lead to what a stagnant price reaction on that area, and or lead price to go lower, but not totally to create a new low. I don't know if you understand. Well, if you don't understand, then you need to step up your game because I'm actually doing these videos for traders who has been on the market for for a while. So on the 4 hours, we have this area. We even have a small fair value gap, which I'm not thinking that will lead price higher, but we are going to use this, then price lower. So what I'm actually anticipating for, well, I'll dig deep in the hourly time frame. All right, so let me just move forward and go back to euro. So the euro US dollar 4 hourly contract shows nicely how EU delivered impulsively lower. Now on the 4 hour, we can see that the euro repriced to a bearish order block and deliver lower, and forming a new 4 hour bearish order block coupled with what a 4 hour fair value gap or CB, which otherwise known as CB, which will likely be used in Friday or next week as the bearish PDRA for price delivery. Conversely, with the XY having a fair value gap or PC and having a higher time frame shift in market structure, indicating that indicating that is what a potential PDRA for price to react from. Now let me explain before I go further. We have seen this up close candle here that what form that interact with this candle. So that makes it like this swing. You can see a swing low on a 4 hourly time frame here. If you go on your chart, you can basically see it forms with the high of the day and now create a bullish order block, a bearish order block here, creating a fair value gap. So if price trade up to this 4 hourly fair value gap before rallying lower, that makes it more a focused area or a much more interesting area to expect price rally from going forward or in future. Now, casting forward on the 4 hour contract on EU, I am anticipating a range in price delivery for Asian session and manipulation higher in London session and distribution lower in New York session. I don't know if you understand that statement. You must be a day trader. You must be a complete trader to understand that statement. Now, the weekly fair value gap or PC might lead to a short price range in Thursday, and the daily plus or OB might also show the price slow the price delivery lower. So what I'm referring to is this order block and this fair value gap. So this consecutive PDRA might not might lead price not to deliver faster than the way it's supposed to be. So that is it for the 4 hourly contract, and I will go to the hourly contract for Euro. Then we talks about the hourly contract before diving into uh the XY. The Euro US dollar hourly contract shows how nicely the market has priced lower, seeking sell side delivery. Now the daily profile is an obvious 3 o'clock AM New York local time as the high of the day that reprice and form a clean interception with the bearish order block, that is the consecutive up close candle that create a breakaway gap. Now this is the bearish order block here, these two up close candle here that lead to this fair value gap is the bearish order block. Now if you carry the low of that order block and trade it lower, like, and you like put a line on it and move, you can see that this bearish order block was used today, right? We priced to it once, priced to it second time and deliver lower, making this fair value gap a breakaway gap. That's what I mean by that statement. Now the low of the day is formed at 9 o'clock p.m. New York local time candle that deliver inside the weekly fair value gap or BC and close inside, which is this particular candle is the low of the day. Now generally on the hourly contract we have seen a successful decline in price lower, which is still showing more willingness to go lower, and this will result to the formation of breakaway gaps and a daily fair value gap from on a formation of our daily fair value gap or CB, meaning that we have seen a successful decline in price. Like for example, we have a fair value gap here. We might not see this will be a breakaway gap because there is no reason for price to come all the way to this area. But we have this bearish order block on the hourly and this on the this fair value gap, and also we have this green candle here. So we need to take cognizance of it. Let me expand something and make something like I want to surprise you guys. See how price use see how price treat that this bearish order block. The low the low of that order block is 1.08075 and the high of this candle is 1.08075. Look how algorithmic it is, so perfect. Alright, so even if you do the same thing with this candle, you will notice that this is just above it with three ticks. So I have done it already. I just above it with three ticks. So price deliver algorithmically, and this is how they use a PDRE when it is intensively bearish, meaning that when the price is so bearish and it is moving fast, if it's not really fast, you will see that instead of using the wick, they will use the body rather than the wick, and the wick of the previous candle of the next candle will enter inside the body of the other candle, but the body will not close above the. Well, I think if you want to understand that, you will need to go and learn more on that. So casting forward, I am anticipating for price to trade lower below the weekly fair value gap BC or BC low and trade into the daily order block, which will result in price to trade higher during New York session, or if price remain inside the range or inside the weekly fair value gap and rally higher during the London session, this will set the New York session to trade lower, meaning that if the London session tomorrow did not, maybe during the London session we are trading the London session, we are trading around this area below this fair value gap, then that will implies that the New York session will price higher. Alright, but if it will be ideal, right? Let me not say ideal, but it will be nice for next week if the fair value gap that is created here is complete. So that means if we trade higher during the New York session, like the London session, and the New York session trade bring the price lower, then we now close below this, so that on Friday we can take the Thursday low, then reprice into the new weekly range. So that is it for this daily video. If you enjoy this, please again subscribe to this channel and follow us for more. Thank you and stay tuned. God bless. Let me continue my music, and I'll propose this video as soon as possible.